Yes. What do you do, traders? This is 10FX here, from the Binary Relay Division. So in our previous video, guys, we're talking about the need of what of a solid strategy, the need of proper risk management, and all those kind of things. And we also talked about why traders actually lose money to the forex market. So in today's video, guys, I want to talk about how to trade the pain and gain markets profitably. That is what we want to talk about today. So if you're new to the channel, make sure you subscribe, and if you like the video, just click a thumbs up to the video. All right. So without wasting time, guys, let's get into it. So the first thing that we do when we are choosing our market is to choose a market which best suits our trading strategy. That is what we do, choosing the market which best suits our trading strategy, right? So we start with a higher time frame, right, which enables us to see what will be going on in that market. So as you can see right now, I'm in the daily time frame, and in the daily time frame, remember, there's not much you can see, but it enables us to see the overall structure of the market, as well as some key points in the market from the daily time frame. We cannot trade for the daily time frame, but then it enables us to see some key points which the market was making from the daily time frame. So as you can see right now, I've just managed to draw just these are gray rectangles, right, which are key points of the market. This is marking the first one, this one is marking our demand, our major demand zone. And the second one, this one is marking our key area of value, where prices can actually bounce on, then turn up. That is what it means. This is the key resistance area. As you can see, this was our support here. This was our resistance. It was our resistance here, right? Which we are anticipating to change to demand here, right? To support. So basically, we're turning from resistance to support here, and we are also expecting it to respect this order block right here and bounce there. That is what we are seeing from the daily time frame. So without wasting time, let's move back to a much lower time frame, so we can see how exactly we'll be able to attack this trade and eventually maximize on the analysis. All right, as you can see, guys, this is a live market. As you can see, this is an actual live market, and we are making live analysis. And of course, we're going to be entering this trade, and obviously I'll be sharing results from this trade later on. All right, so this is what we had from the daily time frame. As you can see, I just drew some key points there, marking our resistance levels, marking our demand levels. So let's move back to the 4-hour time frame. All right, so this is what we have from the 4-hour time frame, right? It's also important, again, when we are here, to create an observable setup, right, from this time frame, right? So I'm gonna just delete this one again, right? Mark some key points again in the 4-hour time frame, so that I understand how the market was moving. So here, as you can see, this is that's our demand we had there before the market made a breakout there and fell down. So that is our demand we had there. That's a key point. That's a key point again. So overall, what we are saying is that the market has to come down to this level here, right? To coincide with the order block that we wrote in the daily time frame. Remember the order block, right? So it's supposed to be somewhere around here. So meaning that we're anticipating that our market will fall and go to this point, and we make entries. All right, so let's just draw maybe some key trend lines that we can see from this kind of market. So I can see we have a trend line somewhere here, right? So it's important when drawing your trend line that you mark the wicks of the market. So as you can see, I've just drawn the best trend line there. Wow, this is nice. All right. I've just drawn a a very, very good trend line there. So this is where the market started, from where I drew the trend line. This is where it started, right? And it's moving down. So as you can see, this is an accurate, very, very accurate trend line. As you can see, if I zoom in, this is a very, very accurate trend line. It's marking our what? It's marking our first touch there, our first touch there, our second touch there, our third touch there, fourth touch before the market broke out, right? Came down inside the demand, then retested here and went up. So it's showing that this is a major trend line that the market was respecting. So what are we saying here? We're saying that the market is going again to respect the same trend line. It's actually coinciding with what we had from the daily time frame. We had an order block down in the daily time frame, if you still remember. So that means this market is going to fall down exactly to this point. Around 93.03, around this point. This is where the market is going to go down. And to confirm this, let's just move a bit to see what the market did, right? That's actually coinciding with what we have there. All right, what it did in the past. This is clean technical analysis, guys. This is clean technical analysis, as you can see. All right, so what it did is there was another trend line. Actually, we can illustrate it by drawing it like this. There was another trend line, right? Perfect. This is perfect. All right, there was another trend line going all the way to this point. So remember, it's always best to take the wicks of the trend line when marking the trend line. As you can see, the trend line is very, very accurate. As you can see, it's marking these points. Actually, this is a retest. That's a result of a retest. I think I already saw it. That's a result of a retest there. So these are very, very key trend lines and very important key points, right? So from what we have on the price line 93.03, as you can see, from 93.03.051, we're gonna have the market bouncing back at exactly 93.051, right? Which is coinciding with this point there, right? Which is coinciding with this point there where the arrow is. That is where the market will tend to give buys and go up, right? So this is one of our very, very key trend line that we have when making our analysis. The trend line that usually crosses from the top down analysis that we did, right, going down. So it's a very, very important key trend line there. So when the market bounces back on 93.051, right, it will hit which point? So we have another trend line somewhere here. Guys, remember, we don't use indicators here. We are pure price action traders. We don't use indicators. We trade what we see. So we would have another trend line there, meaning that when the market bounces up at 93.051, that's somewhere around which point? 051, that's somewhere around this point. Not sure which point it is. No, we actually made a mistake, right? It's supposed to bounce back at around 92.964. Let's see back here. Okay, exactly. That's where it's supposed to bounce back at, because that's our order block there. That is where it's supposed to bounce back at, and it's coinciding again with our trend line. As we can see, there was a second touch on the trend line there at 92 at this point. This is 92.881, right? Exactly. So this is what we have, guys. This is how you break down a pain index. This is how you trade like a pain index. This is how you do the top down approach, and you actually find better entries from your top down analysis. Of course, we are not done right now. If I move back to the 1 hour time frame, I can see clearly where I want the market to go and make entries. This is now the 1 hour time frame, as you can see. So remember, our entry is supposed to be where? It's supposed to be on the trend line, right? On the trend line. It's supposed to be on the trend line. That is where? That is the point marked by the arrow there, as you can see. So it's supposed to be something like that. It's supposed to be something like that. So we just need to adjust. Mind you guys, it's different. Like when you're seeing things from the higher time frame and you move on to the lower time frame, it's actually a bit different in a way, because there are a lot of candles in the smaller time frame. So this is where we would have we will take our entries here for the buy and take profit there. So let me just copy. All right, copy this and put it here. All right, so this is where we'll enter our trade, right? Then exit at 93,565. So for those that are waiting also for this trade like me, right, you just have to put your buying limits and selling limits. So it's going to be a very, very good trade, guys. Make sure you watch out for it. And this is how you break down a pain market and find good entries from the pain market. Mind you guys, this is one of the most paying markets right now. So make sure you wait for this trade and maximize profit. So this is one of the simplest strategies that we use when trading the pain market. So yeah, this is it, guys. StanFX here, signing out. Don't forget to like, comment, and give positive feedback if you like the video, guys. Signing out.